Traders, this is Christian Farmer, Extravagant Trader Group, and this is your end of day market recap for Thursday, the 15th of January. Well, that marks the halfway point for the month, and reminder that we have Monday off for MLK Day. The holiday kind of just snuck up. I realized that yesterday, but so again. Definitely some things to talk about today with price action. Risk disclaimer in front of you. Everything that we're going to talk about is for information purposes only, not giving out any advice or recommendations. Please make sure that you read the full risk disclaimer. So one of the things that comes to mind today after today's price action, where we had a gap up today, you woke up this morning and heard about two really good things. Number one, Giants getting a new coach, John Harbaugh. Welcome to the New York Giants. So number one, very positive. Great news there. Number two, Taiwan Semi, big gap up on earnings, and it brought the whole group with it. It brought the whole semi group up. At one point, the SMH ETF was up about 3.5% today. That also drove up where the Qs opened up for the day, which was up about 1% for the day. All right, so great stuff. Another gap up with some of these, and it's tough because I saw a lot of put activity yesterday in the semis and some of the ETFs. So it's tough to say that you're going to go long. You're going to go along a bunch of these things when you know that you've got overnight risk, depending on what Taiwan Semiconductor does for earnings. But let's say that in your regular portfolio, or if you have a different portfolio other than like a trading portfolio, you may have been able to take advantage of that gap up today and have some nice gains. Or like I said, you're in your trading account, same thing. Maybe you were holding some things that did really well. But these gap up days are almost better to be taking some profits on the open, or maybe trading in the beginning of the day and then just going for a walk. They're really difficult. And what I think the main takeaway, other than of course, like the gap up and how to trade a gap up, is to be a risk manager, and that's something that I should be reinforcing, like in every one of these videos. But it is so important in trading, right? Everybody always has, of course, when they decide to become some type of a trader, part-time, full-time trader, depending on what you're doing, right? You're doing it because you want to make money in this, but what you learn over time, if you've been trading for a long time, is that you have to be a risk manager with what you're doing. You constantly have to monitor your risk, and try not to, if you make money, try not to give back money, and that's the whole key in trading. And I've heard this expression before. I don't know who's come up with this expression, but it's very true. Anybody can make money trading. Anybody could do it. But not everybody can hold on to the gains and do it consistently. And that's the tough part of trading. It's not finding the setups. It's not finding, though most traders are kind of the same, if depending on what their style is, but a lot of traders could find good setups. It's the whole key of making the tough decisions when trades go against you, and having to basically get out of things that look good but don't work. And then of course you try to minimize those things too, and that comes with experience. And that goes back to what I mentioned in the first couple of minutes of this video, where I mentioned that gap ups are not really meant to be, you don't really want to be trying to do too much. And if you do, then a lot of times you're kind of caught with what happened today. So let's talk about what happened today. So this is a little bit counterintuitive today too, because when I wrote my midday note today, this 31% of the S&P was making a 4-week new high today. So a 1-month new high today. That's very strong breath. The question is that sustainable? Is that you saw such good participation from different areas of the market. It's almost at some point a little bit extreme to get that much, 31%. And I could kind of show you what this looks like too. I don't have my midday note up, but you could look at this right in here. Just bear with me 1 second here, and I'll flip this so that you could just see the screen. Let me just enhance the screen for you, and then I'll move this over to Bloomberg. All right. So here you go. 50. So I don't talk too much about 52-week highs because, of course, like I look at these, but I don't talk too much about them. I kind of talk more about the 4-week new highs because I'm a swing trader. For long-term trading, it's great to look at the 52-week highs, but for more of like your intermediate, even short-term swing trading, like I want to know what's happening with the 1-month highs. But here you go. Like this is 12% of the S&P. This is very good, to see how many names made a 52-week high. You could also look at this too on the bottom of your screen here. One thing that's a little bit, that I kind of noticed this just the last couple days is that the new highs were right in the beginning of the, like they hit the peak in the beginning of the year, for 52-week, and they've been kind of trailing off a little bit. They're still very positive. Maybe I'm splitting hairs a little bit with analysis. Then if I look at the 4-week, you're going to see, and it was actually 36%. So that's a lot. That's a lot. You can't, like, you have to scroll all the way down. That's 179 names today out of 500 names today made a 4-week new high. That's very good. And you can see this has been, so if you look at what I'm referring to down here, this kind of shows you, this doesn't include today's activity, which would be up here, but it just shows you the market's been doing pretty well. So what was the reason for the end of day fade today? So let me just go back to the spreadsheet for a minute here. All right, and let me zoom in here a little bit so that you could see what I want you to see. Whoops. All right, so basically this, right? This guy, and it's not highlighted in red, but maybe it should be. But here's the cues. From the open, down 0.75% today. So if you've sold on the, like if you shorted on the open, that was the best. That was probably the best trade to do, in the cues. Now, I don't know if this fade is related to geopolitical concerns. I saw at the end of the day that there's some headlines about U.S. forces moving towards the Middle East. I don't know if it's just, hey, people are really worried about the earnings that are going to happen in the mega cap names, uh, which we have not heard from yet. And specifically, I don't know. I was thinking about this too. This is like my deep thoughts for the day. Right? Something that I've been talking about for basically since the beginning of the year, right? Is that there's a huge difference right now between what small cap growth is doing and what large cap growth is doing. Large cap growth is down year to date. At this point, it's down 0.5%. Small cap growth, on the other hand, and where the alpha has been in the market, as well as small cap value, right? This is where where the alpha is in the market right now, right? And in this too, small caps, mid caps, even Dow. But outside of that, yeah, it's been really tough for large cap growth. Large cap value is doing well; it's up 4%, but there's a lot of profit taking in this. So we'll have to see. I don't have all the answers. I go back to being, you're not going to have all the answers. You got to go. You got to just do what your trades tell you to do, and I'll give you some examples of that. So first of all, let's look at some charts. So let's go to SPY first. So yesterday, just to recap, I always like to start with what I reviewed in yesterday's video. All right, we talked about how we bounced, really nice bounce off that top of the value area, right in here, wonderful. But we kind of failed to we didn't go far, right? And these are the highs from just a few days ago. But now we kind of have to watch to see if we can get back above that. Notice that we were above the 5-day moving average for most of the day, and we didn't close there. So, I don't, it's tough to really be down about the market considering what I just showed you in that spreadsheet and how many groups are like the start of this market that we've had year to date. But you just have to be careful about how you're positioning into some things, and also into some of the names that I think the beta is really high in. And I'll give you an example of a couple things, but I want to finish going through the charts too. But here's the cues, and I feel like if you watch the movie um, National Lampoon's European Vacation, sorry, this shows my age with some of these references that I give, but if you remember that movie when Chevy Chase is going around and he's driving a European car, so he's having some difficulties, and he's going around England, and he goes, "Look, Parliament, Big Ben." It's the same thing here with kind of the top of the value area here. We keep getting to the top of the January value area, and despite these little closes here that got us above, we didn't get any follow through here, but we just can't seem to get can't seem to get right. Can't seem to get above the value area. So this is kind of the issue for the market. You know, we started up here, we went all the way up here, and you're just seeing these. You're just seeing that there's no follow through. I don't know what this print was, but it did take out these VPOCs up here, which is kind of weird. But yeah, we kind of hung in here, and I would have been okay with this. I would have been okay if we just kind of hung in here, maybe went down a little bit. You know, we kind of came in here right around 1055, bounced off of that, and then we just kind of dribbled lower. So not easy. Now I'm going to show you a couple stocks, one of which I was long today, and this is what I mean about being a risk manager. You know, I got into Robinhood because this is a stock that did really well for me last year. And I've been thinking, you know, one of the things that I've said in a couple of these videos is that a lot of stocks made their highs, growth stocks made their highs in somewhere between September to October. And then they've kind of gone sideways, and some of them have managed to turn back up and get either back to those highs or take out the highs. This one's not one of them. It looked like it was trying to kind of form, if you go back to a couple of days ago, it looked like it was trying to basically base off of this and kind of begin to turn. But then look at what happened today. So my trade was to be long again, always versus a level, right? So again, always have ideas and understand where the ideas aren't going to work. That's what the technicals. That's how I use the technicals. The technicals are there for me so that they're going to tell me when when I'm right with my thesis, right with my trade idea, or wrong. Wrong. It broke. It did not hold here. It broke the value area, and that's it. You got to get rid of it. So that's my so that's what I did today is I got out of that, and I got out of a couple other trades today too, unfortunately. SGML was another one too. This one, there was a headline. This was a nice profitable trade. So this is another risk management concept, right? If you have a nice winning trade, which I did in SGML because I got long in here, you know, I took a couple targets on the way up. My final target was going to be the 1709, which we got very close to yesterday. And I did take a little bit more profits off of this one. But look at it, right? You don't want to have a winning trade turn into a losing trade, right? So there was something that happened in Brazil, I believe. And the stock ended up being down 14% for today. Now, again, I don't know enough about what happened there. So it's just understanding being a risk manager and saying, hey, it's back to my cost basis. Let's not mess with it. And back to the 20-day moving average. Now, here's one. Yes, I am from Kiss of Death. I'm just sorry, I'm reading the comments in here. I don't usually read the comments, but so I was going to go over this one too, right? CRDO. This is a name that had good earnings. For whatever reason, this stock cannot get going. And I've looked at this stock a couple times in the last couple days, and I'm like, all right, you know, let me think about getting involved in here. And here's the thing, the thing that where I said in the beginning of this video, you have to be careful about your entries. So you look at the stock and you're like, it was down 5% for the day. Okay, that's a bummer, you know, for the stock to be down 5% for the day. But it's not the end of the world. However, this is where I said you have to be careful with gap ups. If you would have bought the open today, right? Getting all excited about the gap up today, and you know, as you know, folks on social media do, if you would have bought the open today, you would be sitting with an 8% loss because it gapped up 4% today. So that again, being a risk manager is so important, and not chasing these gap ups, because a lot of them, like this stock, has been nothing but a trap, right, over the last few months. I guess you could be still trading the range, but in any event, so that's kind of some of the negative. Let me talk about some of the positive today. But again, you can't just go over the positives, right? You got to go over about how if you're going to be in this game, how you consistently make money, and it's being a risk manager, right? And understanding that. Really nice move with Morgan Stanley. I was wondering what was happening with all the financials. JP Morgan reported, Citigroup reported, Bank of America reported, Wells Fargo reported. All these stocks went down on good earnings. And that's usually not what happens with financials. Financials are kind of tough to trade. Usually half of them go up and half of them go down. And depending on whatever mood people are in, because a lot of times they're all kind of good earnings, or maybe one or two is slightly better. Sometimes Morgan Stanley and Goldman Sachs have great earnings and the stocks falls on that. Today, it was just enough of, I guess, getting washed out from those other reports that this went up today. And look at Goldman today, too. Really strong. So even though going back to some of the fades that you saw today, there was also some really good stuff that happened like this today too. Another trade for me that worked really well is this BKSY, which we had talked about that it saw option activity yesterday. However, it went right to the VPOC, and I took a target here, and I said, hey, let's see if we can get above that, and it faded there. Another stock too that I've been positioning in, and I added to yesterday, which was VELO. Look at what happened to this stock today. Right. So again, I took some profits. I knew exactly where my resistance was. Right. Right around here. And it not only got rejected there, and like this is okay if it kind of doesn't make it through on the first attempt and it hangs in here, but these things really got hammered. Again, I laugh because there's nothing you can really do about it. I mean, the stock going from dropping a huge amount over the last couple hours of the day. You just got to be a risk manager and say, like, that's not good to see a stock do that, and I'm out of this stock for now. What was the other one I was going to go over too? From yesterday, I talked about the quantum stocks, right, in yesterday's video. Right, look at what happened to the quantum stocks today. Right, so let's look at the daily chart, and overall, like this isn't horrible. It's still kind of holding in here. The low is a little bit above yesterday's low. But again, I knew where to take a target. I took a target right around this 31.18. That completed the bullish 80% rule. And then it kind of completely came in. Maybe I didn't need to sell that, but I decided to get rid of it too. Just too many names kind of fell apart there at the end of the day. And I said, okay, we've had a really nice run so far in the category of small cap growth. Let's not push it. So two other things, and then that'll be it for today's video. But the semis, right? And I'm long this in the new TTG global trend portfolio. But this kind of scares me a little bit, right? What you're basically like, what are you talking about? It's made a new high today. Well, it's the gap up that scares me. It's kind of the gap up. I don't like these after we've had a big move, and then you see a big like separation there above the value area. So sometimes like you don't want to see these big like extreme moves. So again, I'm splitting hairs a little bit, complaining, but let's see what the semis do here a little bit. They could back and fill. But ultimately, I kind of felt like taking some profits. And again, it's a trend trade, so I'm really not supposed to do that. I'm really supposed to wait for a sell signal. But a sell signal is not going to come until the 5-day moving average crosses below the 20. And that's a long ways away. So might be prudent to take a little bit of profits here on the semiconductors. And again, they're up huge. Like you can't really get upset about even this candle for the day, because what are the semis up so far year to date? Let's bring this up. All right, so if I bring up SMH, year to date they're up 10%. So again, you can't get frustrated at like a candle like that. SMH is up 10%. We're through 2 weeks. We're through essentially 2 weeks of of 2000, I almost said 2027, 2026, 10% could be a whole year. Like people, that's average what the stock market goes up a year is about 8 to 10%. Semis have done it in 2 weeks. 2 weeks. Amazing. So amazing some of the performance. So what I was going to finish with is be mindful that now that we're halfway through the month, and again, it has been a huge performance month for small caps, small cap growth, small cap value. Keep it and a lot of good trading opportunities. Keep in mind that you don't always get a full month of really good performance. A lot of times it's either the first half of the month or it's the second half of the month, right? Very seldom do you get a whole month of really good performance. It usually kind of like that's how I notice it over time is that if I notice that if the market has done really good for a first half of the month, don't get greedy for that second half of the month. Um, yeah, I mean, and that's the whole thing too. And that's why I've also talked about how it's been easier just to own some of these ETFs than it is to be a stock picker in these. You really have to be in the right stocks. If you've gone into some of the popular stocks, where's Nvidia on here? Yeah, Nvidia is flat for the year. Broadcom is down for the year. And meanwhile, the whole group is up 10%. Again, it just shows you how like this has not been it's been a really good month for some of these areas of the market, but it hasn't been easy to select your stocks, right? I mean, going long, like congratulations if you went long Intel or CLAC, which is a tough name to trade because it's a $1,500 stock, but that stock's up 27% year to date. All right, guys, I'll leave it there. Have a